We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk Bitcoin and US dollars. We're going to look at the Richard Wyckoff supply and demand patterns, and we're going to help out those scared children out there who are starting to panic on these big moves up and down. First of all, Bitcoin is thinly traded, just like gold stocks. And just like gold stocks, 10, 20, 30, 40, 50% moves over weeks is part of the course of events. Now, the big boys want to acquire volume. They wish to accumulate. To accumulate, they need to move price to create emotion. Now, we had to move up from 4,000 to 12,000 because the price of 4,000 was attractive, and they got a bit of FOMO going. So they accumulated there, and they halted the advance around 12,000, which is the resistance. And now they've been pushing down every little bump up. So accumulate on the bump ups, sell down, then accumulate. So that's like sell 10, buy 15, sell 10, buy 15, sell 10, buy 15. So eventually they're accumulating more. And it's the churn process. So we actually have a process, a range of 12,000 to 6,000. So 6,000 to 12,000 is a 100% move. On a wider range, we've got a range from 3,000 to 12,000. So that's 200% move. So it's it's a wide-ranging symbol. So therefore, the percentage moves is going to create a lot of emotion, and the market just refers to that as volatility. But quite simply, it's the big boys moving price action around to accumulate. I'm calling it accumulation because we haven't crashed to 2,000 yet. The pattern of Bitcoin is so typical of a Richard Wyckoff pattern, Richard Wyckoff accumulation pattern. Selling climax, automatic move, secondary test, a bit of dullness, a bit of a bear trap here, spring action here, test there, the rally up because prices got attractive, the prices brought in the FOMO, got too high, and now we're trying to push it back down. But my bet is we're going to have a higher low, and we could see, just around a test around 6,000, which is all very normal, even 5.5. So, if you understand the Richard Wyckoff logic, I'm just going to show you the accumulation map I'm following. Here's the standard accumulation map of Richard Wyckoff. It came down, selling climax, bounced, did a secondary test, and it did the heavy black line. That's what Bitcoin did up to resistance. And now we've got this push down to the lower trading range, this heavy black line here, which is all typical. And I'm calling this phase C. Phase A is obviously the change of character, and phase B is the neutral, bouncing around noise, pushing up and down, tricks and traps. And phase C is the pushing down just before the big move. Now if the big move fails, then phase C actually rolls back into phase B. But we're actually watching this push down at the moment to the trading range as people are accumulating and trying to scare out the children. The weekends, I should say. So here we are. Up to resistance, strength, and we're pushing down to support, a higher low. We'll probably get some sort of spring out. I'm expecting some spring action here. And if that is true, higher we go. Now, take note of this volume compared to that volume. See, there's a heavy downswing here. This was a sudden move down. Everyone was ready to go up. High volume. That was a good accumulation. So it was accumulation because we're down, and then the further selling stops. See how the volume drops, and that was a pure buy zone there. Good accumulation there. Good volume traded hands from the weak hands to the strong. But as you can see now, the big boys are having trouble accumulating because there's no selling. See how the price is coming down, but the volume hasn't yet spiked. This includes the latest price action, so it includes the action over the weekend. So no one's really selling. So if they want to get real volume, they might have to push it all the way down to 4,000 again, which would be hard because the buyers see this accumulation pattern. Here the dullness. Everyone wondered if it lost interest, but this action here this price action between here and there shows there is interest, and the buyers who missed out here will be coming in at a higher low. So sentiment is good, confidence is good. It is a normal Richard Wyckoff accumulation pattern, and we should see demand come in confirming that the buyers won't be able to wait anymore and they're going to pick up price action here. Very typical Richard Wyckoff. Following the channels, momentum, higher lows here. As you can see, this was the big obvious, the momentum tool shows the big strength. And like I said, people have missed out there and who didn't want to pay over 8,000 are getting their chance now to buy under 8,000, maybe above 5,500, maybe above 5,000 to really accumulate, get their cost averaging build up. And eventually the big boys who did accumulate down here, who got all this action here, I'm talking the real whales, I'm talking the gorillas, they'll come in and say, you guys are too late, pump, and up we go. So I would rate this accumulation pattern as near perfect. There's nothing to be afraid of. Watch for the demand to come in over the next weeks before Christmas, and I think that'll coincide with a resurgence in gold and a fall in the dollar. So just be patient and let's see if demand comes in. If you want to follow this price action live, sign up to RTT Plus and go to the RTT Richard Wyckoff campaign blog, where we follow a number of stocks through their accumulation process as they build up accumulation to go in their markup phase. This is still bullish and very attractive. Thanks for watching.